In today's video, I'm going to break down Jason Williams' pitch about something he calls tariff rebate checks. I want to go through what he's actually saying, strip away the marketing language, and help you figure out whether there's anything genuinely meaningful here. And more importantly, I'm going to reveal the actual investment he's hinting at, so you don't have to sit through a long sales presentation or pay for a newsletter just to get the name. So let's start with the big claim. Jason Williams says that everyday Americans can collect up to $8,276 every quarter through something tied to tariffs. He frames it as a hidden income stream that was previously only available to insiders, hedge funds, and elites. But it is now being opened up to the public thanks to policy changes by Donald Trump. He even describes it as federally mandated payouts, backed by the U.S. tax code, which makes it sound almost like a government benefit program. I want you to pause there and think about that framing, because it's doing a lot of heavy lifting. When you hear rebate checks and federally mandated payouts, it naturally sounds like something similar to stimulus checks or government distributions. But that's not what's actually going on here, and this is where the pitch starts to blur the lines between reality and marketing. Jason goes on to explain that tariffs generate billions of dollars that flow into the U.S. Treasury. He then connects this to something called the Federal Buildings Fund, which is used to pay rent for government agencies that lease office space. Again, this part is real. The U.S. government does lease a significant amount of office space from private landlords, and those payments are centralized through funds like the Federal Buildings Fund. Agencies like the IRS, FDA, and others don't always own the buildings they operate in. Instead, they rent them. What he's actually aiming at, in a roundabout way, is investing in a specific type of company that benefits from government rent payments. And that brings us to the real goal of the pitch. He starts talking about external partners that house federal agencies and are required by law to distribute 90% of their income. That's your big clue. He's talking about a REIT. A REIT, or real estate investment trust, is a company that owns income-generating real estate and distributes most of its profits to shareholders as dividends. By law, REITs in the U.S. have to pay out at least 90% of their taxable income to investors. That's why they're often marketed as income investments. So when Jason talks about tariff rebate checks, what he really means is dividends from a REIT that leases properties to the U.S. government. That's it. Now let's get to the actual stock he's teasing. Based on the clues, the most likely company he's referring to is Easterly Government Properties Incorporated. Easterly Government Properties is a REIT that specializes in owning properties leased primarily to U.S. government agencies. We're talking about buildings occupied by the FBI, DEA, VA, and other federal departments. If you look at the financial side, Easterly generates revenue in the hundreds of millions annually, mostly from long-term government leases. Its dividend yield tends to be higher than average stocks, which is why it gets pitched in these income opportunity presentations. The stock itself has had mixed performance over time. It's not some explosive growth story. It moves more like a slow, income-focused asset, and like many REITs, it can be sensitive to interest rates. I should also point out that this entire pitch is designed to funnel you into Jason Williams' newsletter, The Wealth Advisory. And to be fair, there's nothing inherently wrong with selling a newsletter. If you find value in someone's research and want to pay for it, that's your choice. So where does that leave you? If you're interested in REITs, and specifically government-backed real estate, then a company like Easterly Government Properties might be worth looking into as part of a broader strategy. But evaluate it on its own merits, not because of a story about tariff rebate checks. You should only invest based on your own strategy. If you already have a plan, stick to it. If you don't, speak to a licensed financial advisor who can guide you properly. Thanks for tuning in, and if you found this breakdown helpful, don't forget to check out more teaser breakdowns on this channel. If you found this video helpful, please give it a thumbs up below and subscribe for more.